Hi, welcome to my channel. I'm Gil Rossi, investor and funds manager. Today I want to share with you the update of my valuation of Microsoft. They have reported second quarter 2022 earnings, and it's been 7 months since I made my first video about the valuation and analysis of Microsoft. So I think it's time to have an update. If you want to check everything about my analysis related to the quality of the business, go and check my video and my past video. Today I'm going to concentrate only on updating my projections, and I'm going to come with a new fair value, giving all the information that we have been receiving in the last 7 months. So first thing I want to do is to check the second quarter press release. You see that revenue increased to 51 billion on the quarter, 20% year over year, and this is higher growth than what happened in the previous quarter, which was 17% in the last year quarter. Operating income increased 24%, which is a little bit slower than before. And there has been an increase in the Microsoft Cloud of 32%, which is, I think, quite robust. In the conference call, the CEO, Nadella, said that it was a record quarter driven by continued strength of the Microsoft Cloud, which surpassed 22 billion in revenue, 32% year over year. We are living through a generational shift in our economy and society. As every company becomes a digital company, they will need a distributed computing fabric to build, manage, secure, and deploy applications anywhere. I think that one of the most intriguing things about investing in Microsoft is the fact that they are building this fabric, as Mr. Nadella puts it. And if every company becomes a digital company, as he says, then the need for the cloud from Microsoft, from Google, from Amazon, and from all the others is going to be really, really big. So I think that this is a tailwind that this company has in terms of growth for the next decade and probably beyond. If we go back to the press release of the second quarter and the page where they show the revenue for each of the segments, you see they have been growing 19, 26, 15, faster than what they grew in the previous year. And if we go to this segmentation, you see that all of them except Azure and Xbox, all of them grew faster than what they grew in the previous year. But even Azure grew at a 46%, and last year it grew at a 50%, or on a constant currency at 48% versus 46%. So even though it's a negative, let's say, the numbers are still huge. Some analysts are seeing this probably as a negative thing. Probably they see here the first signs of Azure reaching a peak. Like we can see here in this Wall Street Journal article, they mention that the cloud infrastructure service grew at a 46%, down slightly from the prior quarter, 48% growth. And this in a business that is growing from 385 billion in 2021 to 809 billion in 2025. So this is a 20% compounded annual growth rate for the next 4 years, and this is going to be, of course, a tailwind for Microsoft and all the companies that participate in the cloud. But even so, the stock came 4% down after hours, after they reported. Probably, they say, even though everything was better than anticipated, some investors had expected more of the quarterly growth to come from the company's cloud services. So even if the company grew at a 48% year over year, probably they were expecting what, 50%, 55%, 60%, I don't know. It's The fact that maybe they're reporting decelerating revenues for their fastest growing segment is really raising concerns among some of the investors that the pace of growth in that division has really peaked. Oh my God. Well, this is really good, I see, because it gives you the opportunity to buy companies at a discount when things like this happen. You know, company growing as fast as you can ask, and then it dropped 4%, probably because of this. The moment that they released the results, then it recovered. Probably more people with a little more of analysis came to buy the stock. So in any case, I'm going to try to put all the new information and come with the best projections I can. So let's go and do that. I'm going to show the quarterly revenues from the first quarter of 2017 until today, and you can see this is the total, the company revenues. They have been growing quite fast, even though they are up and down on a quarter-to-quarter basis, but they've been 16% on a compounded annual growth rate, and the last quarter 20% as we saw. And they are guiding a 17% growth for the next quarter on a year-on-year basis. Then the three segments, as you can see, each segment is similar in size, and the ones that have been growing faster are this one, which is productivity and business, and the cloud. The one that more personal computer, which includes Windows, it's growing nicely but slower. This is what happened in the second quarter. You see, all of them grew much faster than what has been the norm, and what they are expecting for the third quarter, you see numbers roughly in line with what's been happening. If we go to productivity and business processes, which includes Office products, LinkedIn, and other, and here they have a dynamic 365. You see a similar story this quarter, 13% growth, and they are guiding 9% for Office. Then LinkedIn has been growing quite fast, much faster than what grew from the third quarter of 17, this 29%, and they are guiding in the low 30s. And the other, and the Dynamic 365 included, is growing a bit faster, you know, it's accelerating. And if we go to Intelligent Cloud, well, the cloud, including Azure, is growing quite fast, 26% on a compounded annual growth rate, accelerating 28%, and that acceleration will keep in the third quarter. And enterprise services, it's a low growth, let's say, portion, and it's going to keep growing roughly in the low to mid single digits. If we see here, this is what we mentioned a minute ago. The Intelligent Cloud Azure grew 46%, and the whole cloud 29%. And if we go to more personal computing, the growth for Windows is not that big for the last 5 years, but it's been accelerating, and that acceleration will keep in the third quarter. The gaming, 21% growth and 8% this quarter, and they are guiding mid to single digits. And here, of course, it's important, the Activision purchase that they made. I'm going to talk a little bit about that in a minute. And search and advertising, 40% versus 14.9% on the last 5 years, mid to high teens. This is what they are expecting for the third quarter. And again, in devices, mid-teens, a bit faster than what's been in the past. So as you see, all the growth from all the segments is quite good, you know. It's nothing to complain there. If we now go to the same article I showed you a minute ago in the Wall Street Journal, they talk about the Activision Blizzard acquisition. They are paying $75 billion in cash. And to me, this is the fact that they are paying in cash is a sign of a good capital allocation skills. In my view, as you will see in a minute, the stock is undervalued, and every time that a company buys another company and pays with undervalued stock destroys value for the shareholders. The other thing is that they are buying Activision at what looks to be a fair value. Activision, they are paying 45% premium, but really Activision had been hammered due to different problems that they have. But the fair value of Activision was in line with what they are paying, I think. So that's another sign of good capital allocation skills. And the third one is that they are trying to grow a business, which, as you see here in the article they mention, we're investing to make it easier for people to play great games wherever, whenever, and however they want. And this is important because there's a tendency for people to consume games on the devices in the same way that you are consuming television. And this is the strategy that Netflix is approaching, you know, offering the games in the same way that they offer TV series or movies. So the Activision Blizzard acquisition will help Microsoft in that area. You know, I think it's from a strategy point of view, it's a good decision. Okay, and then let's check the operating margin. You see the operating margin here for the company is in the last 5 years from 31% grew to 43%. And on each of the segments is growing. We have the productivity and business process is the highest margin, the cloud the second largest, and more personal computing the third one. Even this one, which is the lowest one, is a 35% margin, which is quite enviable for a company to have. And so I don't see any problems with the operating margin, really. If you see, it's growing very nicely. So let's now go to my projections for revenue. So I open it on these three different segments and the sub-segments. What I'm doing is I am showing here the past 11 years of a compounding annual growth rate and what I'm assuming for the next 10 years. And this is the third quarter guidance to have an idea of a comparison. Here, what I'm doing is I'm basing this on my assumptions for the last update I did, which I can show you here. So you can see that the changes I've made. For example, here, the main changes in LinkedIn, I increased it 3 points, especially because I see that they are growing faster than what I assumed. And the same happening in Dynamics and others. I am keeping similar growth in Intelligent Cloud, and I'm increasing the Windows 1%, also because I see acceleration lately. I'm decreasing the Surface and devices, increasing gaming, mainly due to the acquisition. I think it's going to impact here. And well, search and advertising I'm keeping the same. So all in all these assumptions I'm making will result on, before I was assuming 10% of growth for the next 10 years, now I'm assuming 11.1%. And if you see, this is what they are guiding, 17.2. So still, of course, because it's a 10-year projection, I cannot keep the same pace that they've been having in the recent past. So not only I'm increasing this a little bit, as you can see, but also what happened is total sales in the previous projections for 2021 was 156 billion and the actual was 168. So I'm not only increasing a 1% point on growth, but also I'm going to start from a higher base, let's say. So that's going to have an impact. If we now go and check EBITDA projections, this is what's happened in the past, and what I was expecting here, this 42% is the actual result, and I was assuming 38% for this same period in my previous assumptions. So I am going to increase that so that the operating margin is going to grow from 41 to 42. Before it was growing from 38 to 42. It's the result of these two changes I'm making. Before I was assuming research and development to sales of 13% all over. Now I'm assuming 12%. And the sales and general and administrative was 17%, going all the way to 15%. That was my assumption before, and now I'm going to assume 15% all the way. Even so, all these changes, it's not really that big the impact, because for 2030, before I was assuming 41% of operating margin, and now I'm assuming 42. So it's only 1 point of difference in this last year, which is the year that's important because it's the one I'm taking for the target price. The EBITDA of this year is the one that's important. So if we go to the cash flow statement, I make no change in the cash flow statement in terms of my assumptions of growth, but because 56.1 was the actual, and if we compare that number with the one I assumed previously, you see 52 was what I was assuming before, and the actual was 56. So even without any changes on the growth, I'm going to start from a higher base, 56 instead of 52. It's going to have an impact, and this is going to be larger than before. So this is the 205 billion is what I'm going to use for valuation purposes, and here we can see it, 205. EBITDA is 246. And the ratios, I'm not changing them, I'm keeping the same as before. So this gives me an average of 809 for 2031. If I assume buying the stock at 300, which is the recent price, and assume selling it at 809, and this is the per share adjusted cash flow that the company is going to receive during these 10 years. So all this cash flow will give me this IRR. And as you see here, if I want the 10% from my investment in Microsoft, the stock I would be able to pay 360. So this is my new fair value. And if you compare that with my previous analysis, you see that before I thought that the fair value was 300 when the stock was priced at 250. That was roughly in end of May 2021. So since then, there has been a 20% increase in fair value from my perspective. So I think that Microsoft is one of the companies that not only is undervalued, but it has lots of room to grow, and it has been also hit by this latest couple of months pressure in the market. So I think that it's trading now in the $300 range at 20% discount to fair value. I am a holder of a large portion in my portfolio of Microsoft, so I'm not sure whether I will add with a 20% discount. But if there's a portfolio that has a very low weighting or no weighting of Microsoft, I think it's a good moment. So that's all. I hope that you find this video informative. Really, even if you don't agree 100% of what I say or the numbers I present here, I hope that it gives you at least an idea of a different point of view, probably than the one that you have. So, okay, I hope that you like this, and if you do, please give it a like, and I'll see you soon. This week there's been many companies that I follow and I invest in, and so I'm trying to update all the analysis of those companies, and as much as I can, I'm going to upload that into videos. The video processing, it takes quite a long time because the way I present it and I try to explain it, much more time than the time it takes to me to analyze the company. So probably I won't be able to do that that fast as the information is presented by the companies. But I'll try to now that I have 2 or 3 companies, like MasterCard is one of them, Visa, the other one, Amazon is coming next week. I want to update also the Tesla and the Apple videos. So that's a lot of information and a lot of work. So I'll try to upload all those soon. So keep an eye on the channel if you're interested on that. So okay, thanks very much for watching. See you soon. Bye bye.